Before anything else, preparation is the key to success. Alexander Graham Bell. Mr. Bell is 100% right. That's what we do here every day is we prepare for trading. How do we do that? We follow these stock charts. We want you to practice with us each and every day. It's free, and it's the most valuable thing you can do for your financial future. Great training for you in the show notes today. Check it out. It's how to use the trade worksheets. Talk more about that at the end. Let's jump into these charts. Everything up for the day. One of those weird days where everything is moving up. The biggest gainer for the day, the S&P 500. Let's jump in and see. Check out how the weekly S&P looks. Is that not fascinating? It is almost a doji there. And what does that mean? Lots of indecision. After strong down moves for 4 weeks, a slowdown in the down movement last week. So far this week, we're at a standstill. That is telling us lots of indecision. What's happening? Is the market getting ready to roll over again? Oh, it will. Guarantee you cannot have the kind of money that has disappeared in the kind of fractional reserve banking system that we have, where banks just make up money and then it's gone. Why? Because, of course, the productivity of not only our country, but the entire world has disappeared. People are just at home and stuff is not happening. And folks, they can print as much money as they want. You've got to have capital formation. You've got to have productivity. Printing money in the short term can sure make you feel good, but it's like taking a cancer patient and giving them a lot of steroids. Yes, they may feel good for a while, but that is just putting off the inevitable. It's like having an infected arm and wrapping it up in duct tape because you don't want to see the pus. It will eventually turn gangrenous and poison your entire body and kill you. Folks, it is serious business what is going on. The end is coming. I just am telling you what I've told you the whole time. Have I not told you exactly what would happen? Did I not tell you when the weekly vertical crossover occurred? Did we not follow it down? Yes. Yes. And what do we see happening now? Look at the 2-day chart. We saw 4 days of up movement, then a spinning top. Again, a red one means indecision, tending down. What do we see on this latest 2-day candle? Now, again, it's just the first day of the latest one. It's a down candle. Price percent oscillator still going down. Well, still down, rather. Derivative oscillators popped over to positive. So we're watching. So again, the 2-day and the weekly are still down. That weekly price percent oscillator hammering down, derivative oscillator still negative. We go now to the 4-hour. Check it out. Kept waiting for it to rotate over going down today. Didn't happen. End of the day with a green spinning top. Indecision, tending up. Look at that derivative oscillator gaining downward momentum. Price percent oscillator just about flat. We're watching to see if there's going to be a little bit more of a pump up. There can be. I mean, if the government wants to inject liquidity, wants to put out great news and talking points, yes. The end will come at some point, my friends. Is this part of the bull trap? It has been nice up movement for a while, but again, is it slipping now? Don't know. I hadn't pulled the trigger on anything because I'm waiting for that 4-hour chart to cross back over going down to give me a good down signal. But the 2-day and the weekly are primed for it if indeed it occurs. We're waiting. We go to the NASDAQ 100. What do we see here? Again, price percent oscillator heading down, derivative oscillator losing a little bit of downward momentum. Now look at what we have here. We have a green spinning top. Again, a bigger one. So there's more upward movement pressure. As far as the Heikin-Ashi candlestick goes, the price percent oscillator's lost a little bit of its downward momentum, but it's still heading down. Derivative oscillator still very negative. Go to the 2-day chart. What do we see there? It is still negative. It is moving up. The derivative oscillator is going into its 3rd day of green. Look at how it ended, though. We've seen a red spinning top before. That is some indecision tending down. Now we have a red, that was a red open box. Now we have a red solid. That's just the first day of the latest 2-day candle. We'll see where that is, where that leads us. And then we go to the 4-hour chart from the 2-day. We saw down movement in the morning, bit of a recovery in the afternoon. Price percent oscillator just wouldn't crossover going down. Derivative oscillators negative. Either it's going to bounce off that, folks, and move up some more, or we're going to see a rollover. Don't know what Friday's going to hold for us, but it'll be interesting. We'll be watching, waiting to play. Now remember this, friends, if there is a rotation over, particularly at the end of the day on Friday, don't forget about the weekend effect. Remember all those training that we did for you. We've released several times on what's called the weekend effect or the Monday morning effect, or the Monday effect, I guess. That means that what happened on Friday tends to translate over to what happens on Monday. Again and again and again, we've seen it. Now that's when they're crossovers, particularly weekly vertical crossovers, 2-day crossovers also. The weakest crossover we have is the 4-day, but that's where we are right now. So we'll see. Now, we're going to leave stocks at this point. We always start with the weekly, and we're going to go to bonds. Look at bonds up for the day, 0.63%. That was our smallest gainer for the day. Look at that prior week we had in bonds, topping out at 179.70. The best we've been able to do this week, 170.11. And again, it is a green up candle. Price percent oscillators heading up. Derivative oscillators losing upward momentum. We go to the 2-day chart. And again, we can see things continuing to track, trying to hit higher than it did all the way back on the 10th, but hasn't done that yet. That represented both, let's see, that was Tuesday, so that was Monday the 9th and Tuesday the 10th of March, then down for 8 days, and it's pretty much been going up since, trying to recover that high it had reached before. Derivative oscillator still negative, that price percent oscillator's moving up. Of course, we had that recross on the 2-day chart back on the 24th, and we go to the 4th. What do we see there? Well, 4-hour chart rather, we see up movement in the morning, a little pairing off in the afternoon, still positive. It has really slid along that red signal line for a while, and we'll just continue to watch and see where it goes. What would we expect if stocks do ramp up? Of course, bonds typically would move down. If stocks do move down, then we would expect bonds to move the opposite of that and move up. So we'll see. We'll continue to watch, see what bonds do for us. That's where we are in bonds. We now go to gold. Check out gold. Now, we're going to start on that weekly chart, and we see that it's continuing to, again, it's still negative. The price percent oscillator is moving up. Derivative oscillator still quite negative. It does show us an up week, but we're not anywhere reaching the highs we have in the past. It is a green open box candle, no wick on the bottom, a wick on top, pushing through that down weekly trend line, but it's still negative on gold. We go to the 2-day chart. Now, it is trying to cross over going up. We can't call this yet until that candle ends. That candle will end on Friday afternoon. We'll see if indeed that 2-day chart is going to cross over going up. If it does, of course, that would take us out of a down move in gold. We'd be waiting to see if that weekly chart's going to rotate over anytime soon going up on gold. That would be beautiful. We'll just wait, see how that plays out, that 2-day chart. Look at the 4-hour. We can see that it was negative back on both in the morning and in the afternoon. I'm sorry, on Tuesday morning and afternoon, Wednesday morning, and then started moving up on Thursday. We'll see if there's a crossover there on the 4-hour chart. So gold is a bit in flux. What are we looking for tomorrow? We're going to be watching the S&P 500. We're going to be watching the NASDAQ 100. And again, remember, if you do see a crossover and are going to do a practice trade, something like PSQ is an inverse chart. If you're not practice trading options, that would be put options, of course. PSQ will go up when the Qs, the NASDAQ 100 goes down on the S&P 500, something like, and there are other short funds. These are just single shorts. SH, Sierra Hotel. That is the short of the S&P 500. We've got a great training. I will put it at the end of today's video on inverse funds, how to make money when markets crash and burn. Again, these inverse funds, something for you to practice as well as practicing puts. We've given you all that options training. Those of you who are not subscribers, of course, have not received that. Subscribe for free at chartingwealth.com. And hey, man, if you want our book, we have books available, autographed copies, Charting Your Way to Wealth. We have a copy for you. If you live overseas, you can't use the link in the show notes to buy the book. The link is also in the notes with the YouTube channel. You can't use the link there because our clearing service doesn't take your foreign credit card. But if you will email us, cw@chartingwealth.com, guess what we'll do? We will send you an invoice from PayPal. Pay that. We'll send your book to you wherever you are in the world. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters. Thank you again, Patreon friends. Don't forget, next Wednesday, the 8th of April, all of our Patreon membership, whichever of the 3 levels you are, will have a live monthly call in next week. That is Wednesday, the 8th of April at 12:30 Eastern Daylight Time. I'll be sending out details to all of our Patreon supporters. Follow the link in the show notes if you're not a Patreon member yet and would like to support the valuable work we do here. God bless.